Hi there traders, this is Steve Miley, the Market Chartist, and another one of our regular MacroWatch weekly updates for FX Explained. And today we're going to focus on the risk rallies being questioned for the week commencing the 15th of June. Well, let's have a look first of all at the macroeconomic geopolitical fundamental developments over the past week in here. The V-shaped economic rally that we've been talking about over the past week or two in here has been questioned by a very somber mode from the Federal Reserve. The Fed in their statement on Wednesday of last week, indicating that potentially the recovery we're going to see in the US economy not as strong as potentially the market is expecting in here. We're looking for a potential V-shaped recovery. We've seen that V-shaped recovery in the stock averages in here, both in the US and globally, and the Fed saying that they're going to keep rates probably on hold all the way out to 2022 at or near zero, and that's because they see the recovery being a slow and long recovery into 2021 for the US economy, not the V-shaped economic recovery. So questioning that recovery, and that's see a shift from a very much a risk on phase that we were in through the late part second half of May into the beginning of June. And alongside that, then the focus has shifted back to the data regarding coronavirus in here, particularly the data from the US, and particularly with certain states in here, certain states in the Southwest, Florida, Texas, Arizona, to a lesser extent California. We're seeing spikes up, increases in the number of cases and to an extent in the number of deaths from COVID-19 coronavirus, and that is again indicating potential for a second wave and concerns about the US economy and the recovery of the US economy. And the other thing to note in here is it's not just a Europe and North American story. Obviously, we've seen COVID-19 on the rise in Latin America in here. Not as negative for the global economy, but nevertheless certainly significant with the largest growth now, the real epicenter of the pandemic now in Latin America, South America and Central America in here at the moment. Cases in Europe continuing to fall. Just of note in here, just over the last few days in here, we've seen a spike, new set of cases arise in Beijing in China. However, in the US, in Europe, in Asia, we're starting to see lockdown rules being eased, particularly in Europe in here. The economies trying to get restarted in here, and certainly we're seeing that in the UK with non-essential shops reopening as of Monday the 15th of June. So let's have a look at what's been really going on, the impact of all of this on global financial markets, the developments there. Well, as I said in here, European, US, global stock averages getting hit from Wednesday post-Fed when the Fed questioned the implications for the recovery in here. Is it going to be a V-shaped recovery, and saying it's going to be a slow recovery? That saw corrections lower in the major global stock averages, particularly in the US averages, but also European averages. Here we see the DAX correcting lower from Wednesday and a very weak close to the to last week on Friday. Similarly in here we've seen the US dollar then as a safe haven currency rebound from last Wednesday, rebounding Wednesday, Thursday through Friday in here. So the US dollar strengthening against most of the major currencies, however weakening against the yen. The yen was the strong currency last week, a stronger yen. Dollar yen down. Remember, dollar rallying against nearly all of the major currencies in here, but weaker against the yen. The yen, the strong currency amongst the majors in here, a typical theme when we go more into a risk-off stage, a risk-off phase in the global economy. So dollar yen lower, but the dollar generally broadly strengthening. Here's Australian dollar, US dollar selling off from Wednesday through Thursday into Friday in here. The risk currencies, the commodity currencies, Australian, New Zealand and Canadian dollars, all weakening against the US dollar and against the Japanese yen from the middle of last week, post FOMC, post Fed since Wednesday. And in turn as well, we've seen the base metals falling in here, commodity prices falling, so correction lower with that US dollar strength, with the risk off phase, a correction lower in COMEX copper, and also oil rolling lower Wednesday through Thursday into Friday. So commodities lower, the dollar stronger, the yen even stronger, risk currencies weaker, and the equity markets on a corrective back foot at the moment. Is this recovery, this strong recovery from May, this risk recovery that we've seen, over, at least for the short term, likely probably we feel into this week? Talking of this week, let's see what we're coming up the week commencing the 15th of June, the week ahead. So we're going to start off with our central bank watch. We have the Reserve Bank of Australia at the early part of this week, along with the Bank of Japan. We also had then on Thursday, the Swiss National Bank and the Bank of England, both on Thursday. So Bank of Australia meeting minutes, BOJ meeting, and then SMB and BOE all of this week. Powell also testifies to Congress this week, the middle part of this week, and also has a speech later this week, so they're going to be much watched. Let's run through the data then. Chinese industrial production retail sales Monday, those RBA meeting minutes and the Bank of Japan meeting and statement on Tuesday, alongside a whole host of data. UK employment report, German CPI, German ZEW survey, US retail sales, and then Powell testifying the first of his testimonies to Congress. Then we get both UK and Canadian CPI on Wednesday, and Powell testifying again to Congress. Going through Thursday, New Zealand GDP, Australian employment report, then that SNB, Swiss National Bank meeting and statement alongside the Bank of England, both on Thursday, with US jobless claims also coming through on Thursday. And we end the week off with both Canadian and Japanese CPI and Fed Chairman Powell speaking again to end the week. I'm going to wish you all a great trading week out there. Be careful as we move more into this risk off phase potentially this week, or is the risk on phase set for a quick return? Our bias is for more negative tone, for more of a risk off phase, looking for stocks to go low and the dollar and yen to both strengthen in here. But we'll have to wait and see as we go through this week. Have a great trading week, and as ever, please do be safe out there. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.